Hi, great people. This is Hope for Every Day, and we are still talking about money matters. And of course, when I get some ideas that are helping me, I can always bring them to you. And there's a question that people keep on asking. You take a loan in a bank and you keep on wondering why the amount doesn't change. You find you've paid for the first month, the second month, and you look at the total and you find the amount is not reducing. There are always some reasons for that, and I got some information somewhere and I felt, let me just share with us. Possibly it can be able to help us a little bit. So, you know, many people struggle silently and struggle with the exact frustration, which is basically paying loans month after month, yet seeing very little change in the outstanding balance, especially with bank loans. It's very common. So let's break down what's really happening and how you can stay on top of it without getting overwhelmed or discouraged. Now, when it feels like loan isn't moving, I don't know whether you've ever had that experience when you feel like the loan is not moving. Now, one of the reasons why you feel it's not moving is because of the high interest rates versus the principal. You'll find that the interest is quite high. So in the early stages of a loan, most of your payment goes to interest, not the principal. So the balance appears stagnant. This is especially true for long-term loans, and especially if the loan is going for 3 to 5 years. The other reason why you feel like it's not moving on is because of the hidden charges. And I think these charges, sometimes no one tells you about it. You know, some banks include penalties, monthly account fees, insurances or transaction charges that quietly inflate your balance. And so hidden charges is another thing, and that's the time you realize that it's like you're paying a lot of money and the total amount is not going down. The other thing is compounding interest. Remember that if you miss or pay less than expected, interest is intended to added to the interest, which keeps the balance growing or stagnant. So if you miss payment or pay less, then expected interest is added to the interest, which keeps the balance growing stagnant. Now, with all this, how to navigate it? How do you deal with it without requesting monthly statement? Because I know most of the time, even some banks, when you request monthly statements, you also need to pay for it. So everything is payment. Now, here is one of the strategies that you can be able to use. First is to build a loan tracker. You can build a loan tracker even on a paper. You can create an Excel sheet and then you build what you are calling a loan tracker. Now create a table with a loan name. For example, if you own KCB Bank, and then you can indicate the initial amount, interest rate, monthly, annually, loan term, how many months are you needed to pay, monthly installment, balance paid so far, expected remaining balance. Now this helps you virtually track if you are paying as expected and motivates you when you see the progress over time. Now, the other thing you need to do is to request the amortization schedule once. It's very important for you to request the amortization schedule once. Now, ask your bank for a one-time amortization schedule, and this is a detailed payment breakdown showing what goes to interest, again, what goes to the principal, remaining balance month by month. Now, remember, you don't need to ask monthly. Just get it once. Once you get it once, it's very much important so that you can get to know the numbers and then compare your actual payments to this scheduled or the schedule for every 3 months. So that is going to help you. So very much important for you to request the amortization schedule, which is very much important. Another thing you can be able to do is use mobile banking or online app. Use mobile banking or online apps. Now, remember, most banks like KCB, Equity, or Cof Bank have a mobile app that can actually show balance, display payment history, generate mini statement for free, set repayment reminders. That's very much important. Now, this gives you quick updates without needing to go to the branch or pay for the statement. That's very much important. Now, another thing you need to do is to set a quarterly review routine. Very much important. Have a quarterly review routine. Now, every 3 months, update your tracker, compare it with your amortization plan, adjust your strategy. For example, increase payment if possible. That is going to help you very much. Now, you also need to prioritize loan without reducing balances. If you are repaying multiple loans, focus first on those that reduce balance quickly. For example, if you're having a loan in a circle, mobile loans to build momentum. So prioritize loans with reducing balances. That's very much important. Lastly, celebrate movement, not completion. You know, the completion might take time. It might take months, it might take years, but I want to tell you it's very much important for you to celebrate movement. Now remember, seeing small gross. Like for example, even if it's 2,000, you're paying 2,000, you'll see you're really paying 2,000 and you had an initial loan of 50,000. It reduces to 48,000. So that is real progress. Your goal is consistency, not instant clearance. Debt freedom is a marathon, not a sprint. So guys, thank you for coming in, and just wanted to explain to you why your loan is not reducing as it should be. You can consider all those things, and that is going to help you at least to be able to monitor how you're making some good progress. So guys, remember, this is Hope for Every Day. Remember to subscribe, like, and share. This is where I give you all information that pertains to life, anything that I think that can be able to add value to you. Cheers, guys.